Hey traders, Nick Shaheen here looking at Tesla, the stock du jour. Actually, people are surprised that it popped. And on the same headline that it's popped on before, this crazy rally that it had, part of it was fueled by the S&P rumor. Two, three times we thought it was in, and I think this time around it's a confirmation of that headline. And it's popping again. And I bet you there are people out there trying to short it. So let's set aside emotions and see if we can put a plan in action so that somebody's not chasing blindly. The easiest way to do it is to divest yourself emotionally and just look at lines on the chart, which is pure math. So they say that these days machines do all the trading. Well, guess what? Machines use pure math in order to make the decision. Zeros and ones, that's all they know. And they look back on history and then decide what do we do now based on the history that we have. What the heck do they call it? It's not just AI. Anyway, so machine trading is really what's driving most of the pricing. So to ignore the charts is making a gigantic mistake. So here we go. Let's look at quarterly basis and look at a few things fundamentally, and we'll put that aside. First of all, years ago, I was against it in the sense was like everybody says it's not a car company, it has this much potential. I made fun of these high dollar amounts, and I had a foot in my mouth from it. But months ago, I decided that look, the balance sheet, the income statement starts to look good to where, hey, this guy is actually delivering. So if we look at the income statement, there's actual money coming in from operations like you wouldn't believe. So it's not Neo. I should say Neo is not Tesla by a long mile, and I'll tell you what number actually matters. And there we go. This one errors out again. Benzinga needs to fix that. It has a sequence. If I click certain buttons, this happens. Yet it pulls up here. All right. So on this side, the price to sales is 14. This is high relative to what it was a few months ago. It was like 5, but it's still not too high if you're growing sales. So if you're going sales, it's not too high because it's not unreasonable to expect that forward yearly sales are going to be much bigger than current yearly sales. So this is the price to sales based on the trailing 12 months. Neo's number is in the 40s, close to 50. So they have 50 years worth of sales baked into this year's sales. The big difference in Neo is that they lose like $11 billion a year. That's a lot of ton. Anyway, I was going to cuss that. That's a lot of money to lose, whereas Tesla actually now has some free cash flow and it has money from operations that are coming in the billions. So it can feed its own growth, similar to the Amazon story, not quite, but similar, where it's losing a lot of money, Amazon, on the way up, but that's because they choose to in order to grow. Tesla is not an Amazon as far as a model, but the scenario now is definitely not as bearish as it was a few years ago, even just the last year. Okay, back to the chart. No emotions, right? So if you give me this chart and you don't tell me what it is, and you say you're buying today at the highs, I would have said you're making a mistake. Not because I expect it to fall and collapse, because onus is on the bulls to beat this point in time, because the last 2 times, you can argue 3 times it was up here, it failed, and it retraced. So I either buy the breakout from the prior fails or I buy the dip. So you hear it often, but you don't see people doing it. They say buy the dip or chase the rip, right? So they don't actually do it. They see an up move, FOMO kicks in, and they start buying regardless of levels. That doesn't work that way. I would put an alert to chase the breakout, because believe it or not, onus is on the bulls to say, hey, you know what, this time it's different. And I would say it's probably 520 with R, with resistance in the middle. What's the resistance? The all-time high. So why not get confirmation of the breakout and chase it? You already missed on this headline. 11%, what is it up? It was up big last time I checked. So 9% still. That you missed the headline. So buy it on the swoop if it comes down, the swoon, because it ends up being a swoop. So ideally you want to do this and break out. Then you have a cup and handle of sorts or whatever, a neckline that fails in the favor of the bulls. Therefore, the bulls will prevail and overshoot higher. It should be 520, but there's a massive fail in between, which is the calling an all-time high as a fail is misnomer, but it is the last fail on the chart. So if you get a dip, you buy the dip in order to catch this rip which you already missed, unless it reignites by breaking a prior fail zone. So that would be the way to trade this. Trade it, not invest in it. If you believe in it long term, by all means pile in, mortgage the house, the kids and the dog, the cars, and go long. Of course, I'm kidding, but it all depends on personal time frame and personal thesis. Thesis aside, what you think of the company, from a trading perspective, the proper thing to do is wait for confirmation that they can, this time it's different than this and that and this collection, and then it's going higher. Let me see my own lines. Okay, so I said the same thing right here, and I drew the line, resistance also trigger. So up here, I would not have chased it, and I drew this line somewhere in past times, and then the proper thing to do would be to buy the dip, and I did how I sold put spreads out to December at 352, 348, I can't remember. Collected $1 for that. So on the way down, people were fearing Tesla. This is when I stepped in. I was like, it's falling into support. Yeah, I'll take your risk. Here's your lottery ticket. And they lost. And this pop here basically guarantees my winnings down there. There are no guarantees, but it's basically a done deal. And I didn't need a rally to win. All I needed is to hold support. Well, same concept here. The same reason I sold into this drop, I don't buy into this rip until it's broken. So that's the concept today. Take your emotions out of it and treat it like lines on a chart. Then you would be a better trader for it. So that's my opinion. So it fell into support and it held. So now I know the charts are good. Higher lows, I know the bulls are in charge. Attacking a neckline, eventually they will break out of this neckline. Whether it's tomorrow or not, I don't know. Heck, with Tesla, it could be this afternoon. But ideally, you'd want it to do, so if I were to trace it, something like this, I mean, I don't want it to collapse, but buying on an up 9% day, the premiums for calls are super hot. It doesn't make, and the VIX is green last time I checked, which means that everything is hot. So if tomorrow we have an up day in the market, the VIX is going to fall. Those calls you bought will be cheaper because just from the VIX effect. So ideally, you want it to drop and then do some sort of I'm going to just put one line up to here, maybe one more fail, and then they finally break out, and then they can chase the upside. So this is the ideal scenario. Regardless, I want confirmation of breakout. That's my 2 cents on Tesla. None of this is a recommendation, of course, because this is my own opinion, and I am not from Wall Street. I'm an engineer who figured this out all by myself, but this has been pretty darn good. Served me well on charts. All right, next signing out.